Welcome to Property Care. Today we are going to discuss about real estate mutual fund. I have put a series of videos, crowdfunding and REIT, real estate investment trust, managed farmland, plot purchase, apartment purchase. So series of videos I am putting with respect to the property investment. So in this series, the real estate mutual fund. So the lot of real estate mutual funds, infrastructure related mutual funds available in the market, and we are going to discuss that. I'm giving just a basic idea and how we can invest in that also and get a return. Real estate in mutual fund, and there are some insights, with respect to the physical asset management and real estate mutual fund management. There is some effort differences. There is small angle on that perspective also. I will add it. On top of that, some 10 secrets with respect to the mutual fund investment, how that gives the return, and I'm sharing that detail also. So my name is Radhakrishnan Kalimuthu, and I do property management business in Bangalore. And I'm doing this for last 10 years, mainly for traveling guys and NRIs, remote owners. Their properties, they are here, but they live in other cities. So we take letting rights and provide end-to-end service, right from identifying the tenant, move in, move out, all the support we give it till they come back. 5 years after they come back, we give back their property and we exit. On top of that, we do buy and selling also. So I am putting some series of investment ideas in this playlist. So I hope this is going to help. Target audience are property investors, tenants, NRI, OCIs, mutual fund aspirants. So there are some guys are very good in mutual fund. They are very keen on investing on that. And I had get some customers, even some elderly people, they are not able to manage their assets. So they have already 2, 3 flats, and on top of that, they are not able to add it. And that's why they are coming to me, and they are giving their flat to me to manage it, because after certain period of time, they find it's difficult. So they want to look for other investment avenues. The disclaimer here is I'm sharing this for information and education purpose only. You just need to get the ideas and understand, do some homework, and based on that, you build, some skills. Gradually, you put a small amount and build, gradually increase the investment amount, get a return. So that is the idea. So why mutual fund? First thing is, this helps to diversify the investment. You investors no need to invest everything in one in flat, one maybe in the plot. And what is that next option? Say I have customers, they have funds. They are not they've exhausted investing in the property. Now where to invest? So they have some NRIs, they have sufficient fund, and they are looking for other investment avenues. So this is one of the investment avenue. And of course, this giving a slight angle on the investing, not only talking about mutual fund perspective, and saving a lot of time on managing their physical assets. So I am doing a property management. I know the customers, owners, how difficult they are finding, managing their property or assets. It can be a commercial or residential, sitting in one place and managing a property in another place. Some owners are okay, they got some good tenant is okay, but I've seen a majority of the owners are struggling in managing the property. So that angle also I'm discussing it. I have 3 to 4 years of stock market. I do invest in stocks and manage. I do short sell also, intraday trading to some extent in corporate bench time. I used to do that, and and I got some profit with respect to the long term, stock investments. Short term, maybe I lost a little. I have a risk factor. I risk it only to the cap, whatever the limit I can do it. I do that short sell and short buy and all those things, and intraday trading. And I don't do big play in the intraday, but long term I used to play bigger amount, and I got money also in long term. So I didn't lose much. I do basically a blue chip companies, Sensex, Nifty, big caps, large caps. so that risk factor is low. So I don't have a lot of time to invest and do daily check on this. I don't have time. So now I'm not doing much. And with respect to the mutual fund, I have an idea, but I'm not a great expert. The reason I'm talking here is, this also an investment avenue. That is the reason I'm talking, and I'm giving a basic idea. So that is my background with respect to the stock market. And the real estate investment is the mutual fund investment, to invest in mutual fund and keep for some years and sell it. And it is a long-term game. It is not that short term, you do it like stock market. Mainly for a mutual fund is for long term, and you don't need to monitor daily like risks you see in the stocks. So here you can do long term. And real estate, with respect to the real estate talks and performance only I'm talking. So there are non-real estate, there are a lot of other mutual funds also. That also we can consider. There's nothing wrong, but I am talking more with respect to the real estate fundamentals. Say there are some customers have a little or no background on the mutual fund perspective. I'm giving some basics and little more. One example I'm giving, which is SBI infrastructure fund example, so that you will understand it clearly. So basic idea of mutual fund is it is fund pooling. It's pool the fund from different investors and invest in stocks, so and debentures and bonds, and share the profit and loss as a dividend or and capital gains to the investors. SIP is something like systematic investment plan. Suppose I have salary income of 10,000, which is I have 1 lakh salary and minimum 10% you have to shave it. So it's not that 1 lakh you get it and spend 1 lakh. So minimum of whatever your income, 10% you should save it for your future. So that 10,000 I am spending, I'm investing as a systematic investment plan in mutual fund. That is the one option. And this is the other way around. SWP is systematic withdrawal plan. See, I have a corpus fund. My gratuity fund, I got 10 lakhs or 1 crore. I am putting that at the beginning itself, and I need some 10,000 every month, or 15,000 every month, or 50,000 every month. So proportionately, that unit will be sold and they credit into your account. The remaining fund will be with the mutual fund only. So that will add up your, your investment amount will add up some returns, so that you don't need to keep in your bank account and get some, minimum 2%, 3% return. So this is another option. So the dividend is something like when you invest, you can opt for dividend. So I need a quarterly dividend, I want it. So like that you can opt. Growth is something like whatever the dividend amount, you reinvest into the same capital, so that your capital will be increased and accordingly your return also will be increased. So that is the idea behind growth. And some people, they don't know about the demat. A demat is somewhere, the demat is the place where you can buy the mutual fund. And there are a lot of demat accounts available, ICICI, Axis Bank, Angel One, I am using it. And it's not bad, it's okay, good. I'm happy. So, and the Kotak, they have Sharekon, they have SBI having it. So a lot of people in the market can open demat account. You can buy, sell units in mutual fund, and there are IPOs, initial public offer, stocks you can buy, mutual fund you can buy, debentures you can buy, bonds you can buy, and these are all the things you can do with the demat. And investment modes are regular and direct plan. Regular is something like some expert will be helping you. Of course, there will be some charge to that. And direct plan is something like asset management company who manages this mutual fund. Through that also, you can buy it. So there are, if you have some already knowledge, skilled investors, then they can go for direct plan. If you are fresh and new people and you are trying to explore in this, you better try with a regular for some period. Later, maybe second mutual fund investment, you can go direct. So you should know these things. NAV, what is the net asset value? So this is the important one with respect to the mutual fund. So it is something like market value of assets, the investment. A lot of investors, they pool fund, for example, 1,000 crore, 15,000 crores. So all the money they put it, and there are some liabilities like operations cost, management cost, some loan, different liabilities with respect to the selected mutual fund. So we have to minus that invested amount minus liability divided by total number of units sold equal to NAV. An example is some XYZ equity fund where NAV equal to, this is just an example for understanding, 50 lakhs and 2 lakhs, 20 lakhs is the pooled amount from the investors and 2 lakhs is the liability for that equity fund currently having it, and 1 lakh divided by 1 lakh units. So they have a total number of units sold to the market is 1 lakh, which is equal to 48 rupees per unit. So we have to buy this unit using this ICICI Direct or any other bank's demat account. We can buy it by paying 48 rupees 1 unit. We can buy it. So these are the example. Investors can buy it, and it's like shares, and these are linked to the market fluctuations. Yes, because the asset management company, there are fund managers. They invest in different stocks, and they will decide the stocks. So whichever that gives a higher return, they will go for it, and cap your risks. So you don't need to, if you have, since it is a risk is involved in stock market, so you can cap it. My limit of loss to this, maybe if you invest, 1 lakh. So, and my loss can be only 15,000. So like that, you can risk it. If it goes below that, you can sell it. But this is a long-term investment. Even if it goes down over a period of time, this will be going higher. So if you look at a Sensex, now 65,000. So it was long term back 55, 60, 62, 60. It is not going below like 40. It's not like that. So that's how the stock works. So over a period of time, it will go up, and again come down, go up. So that's how the stock market behaves. So the units, the individual ownership in mutual fund, it is called unit equal to invested amount. For example, you invested at 10,000 rupees and NAV value is 48. So 10k divided by 48 rupees equal to 208 units. So this is the units. We keep it in our demat, and we can sell it whenever we wanted. So it is we should look for a long-term capital gain. So at least 2 years, 3 years minimum, you should retain and sell it. So now the core mutual fund, what are the 10 secrets in this mutual fund? So the first, when you go and decide to buy a mutual fund, you should set a goal. Like I want to buy an 1 BHK flat in cash, meaning like I'm not taking a loan, and 5 years I will invest, and in systematic investment plan, I'm choosing 30,000 per month. Like instead of paying to bank EMI, because the initially liabilities, it will become a liability, and you will be paying more interest to the bank. So instead of that, you think slightly different, and 30,000 per month, and you are investing it for you and buying a flat of 1 BHK with a return of 8 to 10% return on investment, plus your EPF, other passive income. So by adding all these things, you are buying a 1 BHK flat in 5 years. This is an example. You can change to 2 BHK or whatever the plan you have. Or there are some other option like down payment to the loan. For example, you are buying a 1 crore property, you need 20 lakhs minimum to go for a down payment. Only bank will not fund more than 80% max. So you need a 20 lakhs in your hand to buy a 1 crore property. So 20 lakhs also you can do like this. And the retirement plan, son's education plan, daughter marriage, like this, you should have a clear goal and come into the investment. And the idea behind this is a diversification, and it is an investment avenue like crowdfunding. I put a separate video, real estate investment trust, commercial investment, managed farmland, investing into apartment, investing into plot. I have put a series of videos. You please watch that to better understanding. This mutual fund also one of the investment avenues. So that is the reason I am discussing. This is some extent is a balanced risk. So that you don't need to depend only on the apartment invested and you stick always to that. So it's a diversification. So asset management company, this is another one crucial one with respect to the mutual fund. ICICI Prudential is an example, HDFC, Kotak. So they each people, they have their own asset management company who manages this mutual fund. The asset management company will have a consisting of fund managers. So they are the key decision maker, helps you to do professional management of your investment. So you don't have a direct control when you invest in mutual fund. You don't have a direct control on the invested amount. So the stock selection, which stock performing well in the market, which is not performing in the market, these fund managers will make the decision. They pick the stock highly performing real estate stocks. If you invest in real estate or infrastructure related mutual fund, they look for a real estate specific stocks. So they look for that such stocks and buy it and keep with them, and they know when to sell also. So that is their full-time job. So we cannot go and question them, why did you do this? That's not allowed. So they do, this is what the job full-time, and they do professionally, and it reduces the direct involvement of us. So we are not that skilled to do that activity. So better you delegate it to them, and they'll take care of that, so that our time is saved, and we don't need to worry about our investment go loss. See, exceptional case like Corona, economic downturn, or this recession. So those things are now nobody cannot do anything. So it will go down. Yes, we have to wait for some time. It will pick up, bounce back. So real estate was down when Corona time. Now it is improved. So that is how we have to manage such risks. And these AMCs are managed by SEBI, Securities Exchange Board of India, who is the regulator of these AMCs. Not that anybody can open this AMC, uh, asset management company on their own way without SEBI in loop. So SEBI is a watchdog. They watch all the aspects of this company, how it is running, performing, or they pay the dividend, or the profit they're sharing with the investors, all the balance sheet profit and loss, everything they have to share it with SEBI. And unlike property, it saves enormous time. So, one owner can manage 2 to 3 flats. Beyond that, that owner cannot manage it. It's difficult. See, I think flat owners, they know, they see a lot of messages in the WhatsApp and they fight each other, in the apartment. My dog is jumped, somebody dog jumped, drainage issues. There are so many points they discuss in the group. So if you have 3 flat and you have a 3 WhatsApp group and you watch these things, you are done with your time. So it saves enormous time. So see, if you can delegate it like us, like the property managers, we manage end to end. So if you look at the US, even though the owner lives in the next road, they don't come into the day-to-day aspects of their flat. They don't see that. They delegate to property manager, they manage it. So in such a case, even if you have a 50 flat also, you can delegate it and leave it. They credit the rent in your account. So that kind of management still in India, it is not there. It is evolving. So over a period of time, people aware of it and they'll come to property management guys like us. They delegate it so that they save their time. Suppose I have some owners, they are constructing their own flat. So if you do construction in Indian scenario, construction is not that easy. Managing laborers, managing material purchase and visiting so many vendors, it is not easy thing. So one owner may be able to construct 1 or 2 buildings. That is the maximum he can do, and managing that itself, his time goes out. So real estate mutual fund hybrid picks, which means that real estate, these fund managers pick up stocks of the developers. For example, Shobha, Hiranandani, Salapuria, they see the developers' performance. They see the balance sheet, how they perform over a period of time. If they decide that this stock will give good return, they'll pick up. And the REIT, the Embassy Tech Park, is a REIT stock. They'll pick up that they exclusively for commercial renting and generating revenue from commercial buildings. And the real estate securities, bonds, like infrastructure bonds, National Highway Authority of India, they pick up these things, and bonds, debentures, stocks. This is the hybrid. So all those type of stocks they pick up and invest into the mutual. They take the investor money, invest into these areas. In stocks, if you go for a stocks without a mutual fund, we have to pick up the choose the fund stock, and for us we don't have that much knowledge which stock to choose and which is performing bond, which is not performing. So in these aspects we don't have much knowledge. So we depend on the fund managers to pick up the right stocks and invest it. And these mutual fund investments are specific to the real estate stocks, infrastructure bonds, infrastructure securities, all are, being picked up by a real estate or infrastructure related mutual fund. This is the stock they'll go and pick up. When they refer infrastructure, and all the infrastructure related stocks only they pick up. So if you go for something like equity specific, for example, Kotak, they have a certain mutual fund name. They put only the equity, which is Sensex, big, large cap stocks only they put it. So they'll pick up a real estate specific here. And the investors can buy and sell anytime. It's not that, you invest it and you have to wait for longer time. Like a property, if you see, you have to invest and wait for longer time to get that back. It's not like that. You can sell anytime, short term, long term, both are possible. So this, to invest in stock in mutual fund, you don't need a heavy investment. You can go for a small amount, you can invest it through the SIP, like systematic investment plan, or one time. Suppose if you have 10 lakhs, you can invest it at entire money, and you can withdraw if you want monthly also. That systematic withdrawal plan, you can use it. And this is kind of a passive income. So property needs a huge investment. Of course, it needs a time, energy to manage those things. And the return. So with respect to the mutual fund return, it is through dividend or the growth plan, which reinvest that money into capital itself. So if you sell it maybe 2-3 years down the line, there is a long-term capital gain. Tax will be involved, and so the net after deducting, capital gain tax, which is 2 to 10% is average. I'm talking. There are some mutual funds are performing very well, so some of them are not performing well. So we should be having expertise and consult with the experts and try to select the mutual fund and invest. So they call it is a compounded annual growth rate, CAGR. So you should not see only these things. This is something like it shows some higher number, but there are some hidden charges in this. So when you exit, you will be paying a lot of taxes and management fee. So those things also is there. So like in property, it is a rent and long-term capital gain. Here the net when you sell after 3 years, you will get 2 to 10% is what the approximate return on investment. And it is easy to liquidate, and you don't need to wait like a property selling a long time. So it is quickly you can liquidate. And here with respect to the long-term capital gain, it is less than 1 lakh. There is no tax. For example, if you're selling 3 years down the line, you are selling your mutual fund. So if it is the net capital gain is less than 1 lakh, you will not pay any tax. If it is more than 1 lakh, on the profit 10% equity you have to pay. And the management fee also impact the return on investment. These fund managers, who manages an operational cost, they take some percentage, 1 to 2% of your invested money towards the managing that AMC, and asset management company will take it. And if you are a short-term seller, within 1 year you are selling it, you will be paying 15% tax, short-term capital gain tax. So the risks here is the real estate market down, because these all the things are linked with your stock performance. So high interest rate, regulatory changes, and SEBI may announce some informations. These mutual fund AMC should comply. Suddenly that may impact our investment. Sometime it will go up, sometime will go down. And the economic downturn, which is like corona, recession, political, government changes, and poor management on the government side. So these things also will pull down the stock performance. So we should also factor these risks. So I'm giving one example, which is SBI Infrastructure Mutual Fund. It is a direct and growth plan. So I'm just putting, I took from moneycontrol.com. It is an NAV, net asset value, as on 20th November 23. See, the inception is 2013, it launched. A person invested at 10,000 in 3rd Jan 2013. The value they get it is 45,989. And these are all the dates it's calculated. So 10 years, 2013, now 2023, 55,000. If they invest 10,000, the value is 55,000. This is before tax. So this is the next 18, 20. See, it's coming down because some corona was impacted. So there are some compounded annual growth rate they calculate like that. And returns also discussed in the percentage. This is just a fair idea. I'm sharing it. More detail, you should go for a fact sheet. See, any mutual fund you go, look for a fact sheet. So that will give complete idea. You don't need to go and search anywhere else. That will give complete. Go to the respective bank HDFC mutual fund site, pull down the fact sheet. So this is also I took from the another site, which is SBI site, which is their SBI infrastructure, where and all which company they are invested. So that detail, Reliance Industries, they put 7.87% of total company fund. For example, if you see the big mutual fund, they have thousands of crores. So on the 1,000 crores, 7.87% they put in Reliance Industries, and L&T, and Torrent Power, and Sri Cement, and other lot of companies they invest. The percentage they put it here. They put it as small portion, and if you see down the lot of other companies also, the highest is 7.87. And these sectors, under which sectors they are investing, that investors fund, under which sector they are allocating it, what is the percentage of that? So this is a construction material, 13.16%. Under the construction material, different companies are there. And similarly, oil and gas, petrochemicals, that's Reliance Industries, comes under this. Capital goods and construction, cement, power. So like that, there are different sectors are there, and each sector, what is the percentage they're investing, the investor money, that percentage is listed here. And the CRISIL, Credit Rating Information Service of India Limited. So this is the rank they allocate to each mutual fund. How depends on the performance. So this is something like credit rating company. They allocate a rank out of 5. What is the rank? So you can look for this in the leading site, and if it is a good performing, they'll give 4-star, 5-star like that. So this is systematic investment plan. If I'm investing 1,000, per month on 20 November 13, now become this much. So like that, if I invest 1,000, this much. So that is the calculation they made it as on 20th November 2023. So this also I took from Money Control site, and just a fair idea to understand. This one I took from the fact sheet. So this is the SBI infrastructure fact sheet. So in this large cap company like Reliance Industries, so these are all coming here, large cap, small cap, some Toronto Power. There are other companies like mid caps. So the color is displayed here. So this is the portion they put in large cap, mid cap, small cap, and infrastructure investment trust like real estate investment trust. There are infrastructure investment trust where the infrastructure, road, metro. So those companies also they invested. That is small portion of investment, which is 2.5%. And other cash equivalent and other things are 4.27. So this is how the total mutual fund got invested. So to understand this, this is the picture will help. So watch for how to buy it, watch for market, invest in small, gradually increase, monitor the performance, sell when overvalued. Some market is peak. That time you can sell it and reinvest when dips. When market comes down, invest. Market overvalue, sell it. See, this is the strategy you should follow. And 3 years is approximately you should hold. Then only you see some return. And I'm sharing this infrastructure related, real estate related things. Suppose I have some customers who are good in auto industry or retail industry or a healthcare industry. If you are confident on choosing the mutual fund, you can select the other mutual fund also. And there are some index fund also available, which is what they primarily target on blue chip companies. Their stock only they invest. They don't go to small cap, mid cap, other companies. Blue chip companies only they invest if you choose the index fund. So this is another strategy. So more detail, you please meet some bank people, read investment guides, trusted investors you meet, discuss financial advisor and invest. Don't just jump into, suddenly into it. Just watch for it, slowly, small investment, and gradually you can increase it. So this is our vision, mission. It is self-explanatory. We do property management and real estate services, and we do for South Bangalore right now. And this is our service catalog. It is self-explanatory. You can go through it. If any help required, you can connect with us. We can help you on this. And this is the real estate specific book I'm writing, and I'm doing this currently. And after some time, I'll publish it, and we'll publish in our social media also. So thank you for watching, and I hope this will give some basic idea of mutual fund investment with respect to the real estate. And so I hope this will be helpful. And if you like this, please give thumbs up and subscribe, and bell icon, you click it, and share it with friends, family, those who are having some investment idea in mutual fund. For them, this will help. In case you still need more help, I have some experts I can connect in case if you require more details with respect to the mutual fund. I can connect with an expert and they'll help you on this perspective. Thank you for watching. Thank you. Bye bye.